Welcome back to Kearney's Tech Sketch, where every month we unpack insights and new developments happening within high-tech markets. This month, we'll discuss more on how to increase mature node capacity, including ways to deploy the CHIPS Act funding for efficient spending. In the last episode, we concluded discussing the exciting findings of a Kearney study revealing a $500 billion opportunity in unmet demand for mature logic chips. We also outlined the $52 billion in incentives available within the CHIPS Act. We see three avenues for companies to engage with this $500 billion opportunity. First, organic growth through the building of brand new fabs. Second, repurposing assets from non-logic fabs. And third, targeting acquisitions to quickly bolster production via turnkey solutions. We'll dive into each of these in a little bit more detail. First, to secure CHIPS Act funding and take advantage of this opportunity, companies could build brand new fabs specifically for mature node chips. Effective use of the CHIPS Act's $39 billion in manufacturing incentives and $13.2 billion in R&D and workforce development will help offset the heavy investment. In our second strategy, while companies might want to use the CHIPS Act funding to build new fabs for leading-edge chips, these companies should consider repurposing depreciated assets, either from internal growth or acquired from a non-logic fab, to help boost production capacity. For example, Texas Instruments repurposed a Micron fab for advanced analog and 45 to 65 nanometer nodes. Small to medium cap players could be attractive targets for equipment acquisitions, as these companies have less financial stability during business cycle downturns. Needing increased cash flow, they will have attractive equipment assets to acquire and repurpose. For example, Texas Instruments acquired Qimonda equipment assets during their 2009 bankruptcy. Finally, the third strategy involves finding full fab acquisition targets to increase capacity quickly. While this doesn't take advantage of the CHIPS Act funding, acquiring an established fab from a competitor ensures equipment and labor assets are already operating in the desired market segment, requiring minimal operation changes, and can maintain higher margin with lower ASPs. For example, last year, Semiconductors acquired GlobalFoundries' 300mm fab. In our next part, we'll talk about some of the potential geopolitical risks from other government incentives. As always, reach out to our Kearney experts if you have any questions or would like any more details. Thanks for watching and join us next time on Kearney's Tech Sketch.